So today's topic is cost, volume, profit analysis, CVP analysis. This is cost, volume, profit analysis. Okay. So cost, volume, profit analysis. So what is cost? Cost is nothing but what you pay to purchase some particular item or good, or what you incur to produce it. Both are costs. Okay. So cost is nothing but what you pay or what you incur. Volume is nothing but the quantity what you want to produce or you want to purchase. And profit is nothing but the result what you get from your transaction. So cost, so like ultimately what we are doing here, cost, volume, profit analysis, how much you are going to spend for what volume and what you are making, what you are going to make out of that. You're going to spend money to purchase goods. We purchase only to sell. Okay. And how much volume we are going to purchase, that is what is important, because that much we are going to sell. And from this purchase sale, what is the profit we are going to make? That is what we are going to see. Okay. And we are going to see that the cost should be the ultimate aim of a cost accountant is always to see that the cost is minimized and the profit is maximized. Okay. That is what actually profit maximization is not his goal. Ultimately, it is the organization's goal. But what he sees is the cost should be minimized. Okay. So ultimately, when the cost minimization happens, there is a maximization of profit ultimately. So let's see the chapter and let's see what we are supposed to cover up and some important things we are going to see right now. Okay. So this is what we are starting today. Section C, the decision analysis, decision making process, other decisions, and marginal analysis. Till here that is what we are going to see. Pricing strategy and risk management has already been completed. I will share the videos to you. If not, if something is left over, I'll cover up, because risk management is completely done. Okay, we have done already a session for that. And if I'm not wrong, we have done this even. If we've not done, we'll do it. No problem. That's a one hour session class. Investment decisions already done. Each and every aspect has been covered for everything, and ethics is done. So this is the only topic which we're going to finish and wind up our this book, and then corporate restructuring and one small topic. Then your part 2 is done. So let's see what they are saying here, and let's understand the things from very basics. Okay. So don't worry, we will, since they are also starting it like in the casual way, we will go with our slides and make the concept very easy for you. Okay. Chalo. So we will see various basics for this. Okay. So before going into all this, okay, fine, we'll go with the slides even. That's a better thing. Okay, let's like go into this. We'll start from here. So what you're seeing on the screen, CVP analysis. Okay. So like it is this cost, volume, and profit analysis is a very powerful management tool. Why it is a powerful management tool? Because you are seeing the interaction between all these things. Okay. So helps explain interactions between selling prices of a product, volume or level of activity, per unit variable cost, total fixed cost, mix of products sold. Okay. So you're going to see all these things. Am I right? So this particular CVP analysis is a very important tool. Why? Because what you're going to see here is you're going to see the interactions between all of this, like at what price you should sell. Okay. Seeing the competition as well as the competitive advantage what you can create because of bulk production. Today China is the today, like before the pandemic period, everyone used to depend on China because it was the world's export hub. Why it was export hub? Because it had that price advantage. Okay, the pricing of Chinese products were very very cheap when compared to other products made or manufactured in other countries. So it had the cost advantage. Okay, so we also should see that what demand our product has in the market, what cost advantage we have. Can we produce at a very less cost and at a less margin? Can we sell and have a competitive advantage? Or what is that we can do for the selling price, like how much margin we should add to the cost so that we get a selling price and sell the product in the market, to keep the competition healthy, as well as to take advantage, and as well as create some we should have some expertise when compared to others, that we could make good profits. And here comes how much volume you need to manufacture, or you need to purchase, or what should the level of activity, at what level you should perform your activities. Then per unit, what is the variable cost? You always know a property I used to tell. Per unit variable cost is always constant or fixed. Okay, whatever the activity level I have, suppose I am doing an activity at 1000 units or 2000 units or 3000 units. In part 1 I've already done the budgeting chapter. In that we have already seen a flexible budget. In that I've already explained this concept. Again I'm repeating. So if at all, variable cost, okay, variable costs are many things. Suppose I take direct material. So for 1000, and the direct material is at the rate of $5. So for 1000 units you are going to shell out $5,000, $10,000. And again here $15,000. So what you're seeing here, your cost, your variable cost per unit is always fixed, but your variable total variable cost. So I can write a point here. Per unit variable cost is always fixed, and total variable cost is always variable. So you can see it is varying for different units, different levels of activity. Or if you are producing more units, the variable cost, total variable cost will increase, but your per unit variable cost is always fixed, okay, or constant. Variable with respect to number of with respect to level of activities. And let's see the property of fixed cost. Whether you produce 1000 units or you produce 2000 units or you produce 3000 units in your factory premise, you are going to pay the factory rent same, that is $10,000 in all the cases, for example. So total fixed cost, this is the second property. Property number 1, property number 2. Total fixed cost is always fixed for any level of activity. So whatever the level of activity you perform, you're going to pay the same amount. Fine. It's going to be the fixed one. So total fixed cost is always fixed. But when we see per unit fixed cost, definitely there's going to be change with level of activities. How? See. So now what I'll do is, like, I'll just do a per unit thing, like 10,000 divided by 1000. I'm getting $10. By 2000, I'm getting $5. 3000, I'm getting $3.33. So what they say, when you produce more, okay, when you produce more, you will get an ultimate benefit because your fixed cost is always fixed. So I have already taught you leverage concept in ratio analysis. In that, what I've said is you can take leverage or advantage of your fixed cost, because whatever the level of activity you have, or at any activity level you are performing your activity, or you're producing like whatever you want to manufacture. If you're producing more at a high level of activity, you always see the fixed cost is very less. The per unit fixed cost is very less. Okay. So this is what you can take the advantage for when you're producing more. It is always fixed, and per unit it is reducing all the time. Okay. It is not fixed, it is variable per unit. Okay. So total fixed cost is always fixed for any level of activity, and per unit fixed cost varies with respect to level of activities. Okay, fine.
John sir,
Yes,
sir, I have read this thing in the book.
yes.
What they are saying, even the total fixed cost as
Hello.
fixed cost, they have certain. Hello,
Yes, yes.
can you hear me, sir?
Yes, I can hear. Yes.
Okay. No, I have gone through the book, sir. So
Hmm.
in that they are saying that even the total fixed cost is
Hmm.
going to change after a certain level of
Yes, yes. I'll
activity.
tell you. I'll tell you. Don't worry. I just got your query very properly. See, they say that you need not worry about this fixed cost any point of time. So now the doubt is a relevant doubt, not a problem. What happens? This factory rent, you will be having an agreement with the lessor or with the owner, and as per the agreement, he says that every year the rent will increase by 10%. So here, next year, what happens? Your 10,000 becomes 11,000. Am I right? Okay.
Yes.
But we always see a performance activity in a particular period. So we see in a 1 year period of time. So we only consider this particular property that fixed cost is fixed always. This changes in the fixed cost will be seen in the next year. And $1,000 increment is not a big deal here. Okay. Why it's not a big deal? As you become grow old, you expect the business to even expand, and this becomes peanuts in the coming period of time. So fixed cost increasing to some point is not a relevant thing. Okay, we always are worried about this variable cost. This definitely increases with level of activities, and we can't do anything for this. Okay, this will definitely increase, but what advantage we can take is of this fixed cost. Okay, so your doubt I understood, Umar sir, ki kya hai, like if it is increase, yeah, it will increase, but not in this particular year, it will increase in the next year. Suddenly
No,
there
because
cannot be a change. I took an example of rent and I explained you.
okay, okay. No, because why this question
Got it?
came in my mind is right. When I was revising the chapter, they took an example of like a salaries as a fixed cost. Okay,
Yeah,
so
salary is fixed
in
cost.
a
Salary,
clinic,
yeah, you can take anything which is of fixed nature. And
sir,
you
can
know,
I say
salary,
no?
yeah, I cannot hear. Yeah, please, please.
Okay, okay. Sorry, sorry to interrupt you, sir.
No
So
problem.
my concern,
Uh,
no,
uh,
because what examples I have taken is like in a clinic, if there are two staff who are taking care of customers or patients.
uh. So we are paying different salaries to them.
So once like certain number of patients, one more person has. So in that case, the cost will increase with a big margin. So they said that after certain level,
No, no,
definitely fixed
see.
cost will change.
See, your doubt is a different thing here. You are speaking about the semi-variable thing. Okay, semi-variable. There are three things here. Again, I'll come to that. Just a second. That's not fixed. Fixed, variable, semi-variable.
Mhm.
So what is semi-variable is nothing. But I'll give you two examples regarding salary. Also, I'll go about that. So what they say is, in United States, they work as they see they give payment hourly basis. So $30 is what they have fixed salary for you per hour. Okay. So if you are working for 8 hours as per the government norms and conditions, okay, so they'll give you $30. So $240 is fixed. That is always fixed. No change in that. But what happens if he is asking you to work for 2 hours more? That is overtime. He's going to pay you $40 for each hour. So there you can see a change. Am I right? Then whatever they
Yes.
have fixed from that, they are going to give you a higher amount. Secondly, so this is semi variable. Now secondly, one more example. You when like we were small, we used to have like landline or land telephone at home. Okay, we used to have telephone. So what they used to say, they used to say like in 1 month we are going to give you like 200 rupees is what you need to pay. That is fixed. Whether you call someone or you don't call someone, it is none of our business. Okay. And beyond this
Okay.
200, if each call, whatever you are making per call, we are going to charge you 2 rupees. So with the number of calls increasing, the bill would increase. And then we used to get 1,000 or 2,000 rupees ka bill. Okay. If we change this
Okay.
scenario in one more case, okay, one more case, they'll say 100 calls we are giving you free. 100 calls is complimentary. Okay, that means it is like, or they'll say 100 calls, first 100 calls, whatever you are going to make, we are going to charge 1 rupee. And then whatever the calls you are going to make beyond the 100 calls, we are going to charge 3 rupee. So this is also semi-variable. Okay, some element is fixed and some element is variable. So semi-variable is a combination of fixed plus variable. But fixed is purely fixed, where we took the example of factory rent and salary, etc. Variable is like I've already explained you. So hopefully I
Okay.
think all of you got the concepts. Huh?
Yes, sir.
I was able to explain you whatever the query you had. And let's see, like now next slide. So this CVP analysis gives you a very good interactions, like it helps you, it explains the interactions between selling price, volume or level of activity, per unit variable cost, total fixed cost. I've explained the properties even right now. And mix of products sold. Mix of products is what? Some products are kind of what we say, like mix of products. May will take a good example. Like a normal product is a normal product, like wheat flour. Wheat flour is wheat flour because it is made from wheat and there is no mixture in this. But if I say you multi-grain flour, it will have wheat, rice, corn, and soya, for example. So these are nothing but product mix. Okay, so here there are many flours mixed together and they are selling you a multigrain flour. So that is what also we are going to see how. So in that, what matters, what matters here, what matters here is the costing would be different for all this. So I'll just write down the names. I said rice flour, I said corn flour or starch, whatever you want, you can say. I said soya flour, soya bean flour. I said like chickpeas flour, whatever it is. Okay. So there are many types of flours and all these are healthy ones. And you can do this at home. Even you can just mix all of these things and get your flour done and you can eat chapati of that healthy thing. So wheat flour, the costing would be different. 1 kg wheat flour would be 40 rupees, for example. And rice flour would have a different cost. This would have a different cost. It would have a different cost. It would have a different cost. And based upon that, how much grams you are mixing up. So 1 kg multigrain flour is not totally wheat flour. It may be 400, 500 grams of wheat flour. That is the main ingredient. Plus rice flour 100 grams. Okay. Plus corn flour 100 grams. Plus soya flour 50 grams because it is filled with proteins and then the taste would be somewhat like sour one and like like corn flour, it will be like 100 grams, for example, or 200 grams. Okay. So now the question arises is this will you'll be bringing 1,000 grams, 1 kg for for 50 rupees. Now you need to find out per gram cost, and that per gram cost you need to multiply with 100 grams and then you get the costing. So that is all is a matter of costing. So why I'm giving you such good examples, like real life examples, like you, it will be interesting for you to do such kind of experiments and study the subject. Okay. So is it very interesting? Today you can do experiment at your home. You can take this multigrain wala concept and you can see like if I have so and so wheat and on rice and corn and all, and I have 1 kg, it is costing me this much, divided by so and so, get per unit cost and multiply with the number of grams what they have the quantity in this, and then you get the cost of the multigrain flour. Okay, this experiment should help you in future. Why? Because you become cost accountant of a company and you'll be having such kind of tasks to be done. I'm not saying you'll be definitely into food beverages. You can go into any company. So next concept. So let's see what is the next thing what we are seeing here. Just a second. Yeah, CVP terminology. So selling price is the amount for which 1 unit of product is sold. Very simple. Sales revenue is nothing but selling price multiplied with the number of units sold. Total cost is always a combination of fixed cost plus variable cost. Variable cost per unit of the product, and total fixed cost. Okay, just a second, I'll come back again. So total cost is a combination of total variable cost plus total fixed cost. Variable cost, you'll take per unit variable cost, multiply with number of units, you'll get total variable cost. And total fixed cost is always fixed, you know. So when you combine both of them, you get the total cost. So I'll again write that point here. So any point of time, total cost is a combination of total fixed cost plus total variable cost. Now you always know, whatever the product you make, suppose I am making a mobile phone, I am a mobile phone manufacturer. These are the two types of cost what I'm going to incur to make this mobile phone, and the combination of these two is going to give me the total cost of the mobile phone. Now fixed cost, I'll give you examples. Whatever the salary I pay to my employees who are working, generally whatever the overheads you incur, overheads are generally indirect costs. What is an indirect cost and what is a direct cost? Direct cost is nothing but what you are incurring to produce a product. Okay, and what you are paying to people who are directly involved in production of a product, or whatever the cost you are incurring for your prime activity. So that can be production, because I am manufacturer of mobile phones. Okay, so my prime activity is manufacturing. So whatever the expenditure I incur for manufacturing process is nothing but the cost attributable for that process is nothing but direct cost. So very simply I can say direct cost is nothing but the direct material, the direct labor. That means whatever the wages I pay to labor. Okay, I am fixing $20 per hour, for example, and direct material, direct labor. So these are the examples of direct cost, and direct cost are in general always variable of variable nature. Okay, material, labor, then comes the overheads, and overheads are always of indirect nature, and they are always kind of fixed nature. Okay, so I'm justifying that, I'm proving to you. So direct material, for example, I'm going to produce 1,000 units, 1,000 mobile phones. So whatever the direct material I'm getting, raw material and all, so those are costing me. I have a lot of products, I'm a lot of raw material is required to make this mobile phone. So I've got a like and this mobile phone is a combination thing. Okay, it's not one simple thing like wheat flour. Like you have got the multigrain flour example. In that way, mobile phone is also similar to multigrain flour. You will be having the camera, you'll be having the sound tutors, in nothing but speakers. Okay, I'll just put speakers in this. Okay, you'll be having a battery, you'll be having the body, then you'll be having the software. So all these things are different, and for all these things, and many of the things you won't manufacture even. Okay, except Apple, and Apple even outsources to its vendors to make a lot of things. So it's a complicated thing, mobile phone. We will just Take the multigrain one. Okay, mobile phone, no problem. I think you can correlate that. So whatever the whatever I am bringing the material for 1 unit of mobile phone, I am spending $100 as raw material. Okay, and then wages I am paying to each labor is $30. So this particular thing will vary now for number of units you are producing. For 1 unit is $100. For 1,000 units it will be definitely like $1 lakh, and for one labor I'm paying $30. For 1,000 units, I have how many labors in my company? No, I'll just see how much cost I'm incurring, labor cost. So it will be $30,000. Okay, that is the labor cost. Now I'll be dividing that in number of labors and I'll be giving them the payments. That's a secondary matter. And salary, what I pay to my employees is a overhead. That is a variable cost, and it is of fixed nature. Rent, it's a overhead. It's a variable cost. Okay, it's a variable cost. Being even variable, no, sorry, it's a fixed cost. Sorry, it's a fixed cost. Okay, and these are indirect expenses. Overheads are always indirect expenses, and most of the indirect expenses are of fixed nature. Salary we pay fixed, rent we pay fixed. Okay, so these are all examples. So here we are going to, yeah, where we seeing is like total cost we have got. So here are certain equations. Please concentrate. Total cost is a combination of total fixed cost and total variable cost. So how will you get the total variable cost, boss? Variable cost per unit into number of units. Okay, so that is what when you add these two, you get the equation. And profit equation is nothing but sales minus total cost is profit. Okay, sales revenue minus total cost. I'll put it here. So sales revenue minus total cost is profit. And how you get the sales revenue? Selling price per unit into number of units. This is similar to mathematics kind of concept. Total cost, how you need to find, you've already understood. Okay, and selling price minus fixed cost minus total selling price minus variable cost. So I'll come back to that, don't worry. So we'll elaborate on this. So as we started, total cost is equal to total fixed cost plus total variable cost. Okay, or variable cost, whatever you want, you can keep. And sales revenue minus total cost is equal to profit. So here in place of total cost, can you put this equation? Yes. So sales revenue minus total fixed cost plus total variable cost is equal to profit, or sales revenue minus total fixed cost minus total variable cost is equal to profit. Anything is all right. Okay. Now let's move to the next slide. Parallels the components of variable costing income statement. Okay. So this is variable costing income statement format. Sales minus variable cost minus total cost is profit. Now here one more element will come into picture. It will jump. I'll say what is that. So what are the assumptions in CVP analysis? Cost can be accurately separated into their variable and fixed components. Yes. So this is a very highlight thing or very good thing about CVP analysis. We can divide the cost into two parts here. Variable nature cost, we can keep it separate. Fixed nature cost, we can keep it separate. And we can know like both the things when we combine. When we combine both things, we get total cost. And total cost can also be separated, segregated. Now, both unit variable cost and total fixed cost remain constant within the relevant range. I already explained you. Inventory levels are 0 or do not change. Okay. Costs are linear. Linear is nothing but you increase the number of units, the cost will change. Okay. So that's there will be a perfect relationship between cost and number of units. Sales mix is constant. That means whatever the sales you do, like whenever you mix number of goods and sell, that will be constant. This is the CVP graph. These are the number of units and this is the dollars. Okay. So what is happening? See, so whatever the units you produce, either 100, 200, 300, 400, 500, 600, 700, your fixed cost is always fixed and it is constant. for any number of units. But what I'm seeing here, the variable cost, if I'm not wrong, they have mentioned that, I think. Yeah. So this is the fixed cost, and total cost is a combination of fixed and variable. Okay. So you know variable cost will always vary with number of units, and also your total revenue will be high for number of units, because your selling price will be multiplied with the number of units what you are selling, and it will be also increasing with more and more number of units. Okay. You sell more, you generate more revenue. You sell more, you generate more variable cost, but fixed cost is fixed. Yeah. Now we are coming into break-even point concept, and I've already explained you what is the break-even point thing yesterday itself. Okay, with a very good example, and again I am repeating that example because today we are into the topic and we are already into the flow. So break-even point is a point where profit and loss are the same. That means when profit and loss are the same is nothing but you don't have, when your profit is like suppose break even point, what we can say is the point at which you are not at profit and not at losses, that is 0 rupees. So I have like put 1 lakh rupees in a particular, so leave that one. Break even point, they say demand is equal to supply. In various fields we can use break even. Break even is nothing but suppose I invested 1 lakh rupees in a business. So so I will try my level best to recover this 1 lakh rupees. Okay. So it took 1 year for me to recover this, like whatever I've invested. So investment done by me is 1 lakh and recovery is 1 lakh. Sorry. This is negative cash flow, positive cash flow. I got 20,000, 40,000 in a year and then 40,000. Okay. So this is negative. This is positive. So negative figure is 1 lakh and positive figure is 1 lakh. And if someone asks me what benefit you made or what is the profit or loss when I add both of them, because you know you need to find out the difference. Okay. So I get answer 0. So this is the point where I can say how much I have put, I have recovered. That is the break even point. But for example, if whatever you have spent is 1 lakh and what you got is 1 lakh 20,000. So from 1 lakh 20,000, when you remove 1 lakh, 20,000 is an additional thing you got. So I can say that is my profit. Okay. Example. Now here don't ask me a question, sir, these are cash flows. How come you can say it is your profit? So I'll just say it is my cash flow, na 20,000, and out of that like 40% is my profit. So 8,000 is my profit. So I can say that I have incurred profit. I have earned profit because what I invested, I got more than that. Okay. So what I invested, I got, that is exactly the point at which you are not. So I have invested this much and I have recovered whatever I have invested. So when I added both of things, I don't find any difference between what I put and what I got. So that is the break even point. Okay. So can you say that, like, I can really say that my profit and loss, I don't have any profits, I don't have any losses, because loss is a negative figure. Profit is a positive figure, and 0 is neither negative nor positive. So if I get positive figure, I am into profits. If I get negative figures, I am into losses. But if I get 0, I am not at profit, not at loss, because 0 is neither negative, neither positive. So this is the break even point. Okay. So I hope everyone understood. The point where sales revenue equals total cost. So here also I can say, so I just so I can give this particular example as in this way. This is my total cost. This is my sales revenue, and sales revenue is equal to total cost. I have put 1 lakh, I have recovered 1 lakh, so that is equal to break even point. Okay, no profit, no loss. So before coming into contribution, let us discuss something regarding contribution. Okay. So contribution is the amount of earnings remaining after all direct costs have been subtracted from revenue. And you really remember the direct cost, what I used to say was direct material, direct labor. And direct material and direct labor are always of variable nature. So I'm coming back to that. What is the contribution? Okay. So what is that point we are discussing here regarding contribution? Contribution is the amount of earnings remaining after all direct costs have been subtracted from revenue. So direct costs are what? Direct material, direct labor, and they are of variable nature. So when you reduce or when you subtract your variable costs from your sales, you get contribution. And when you get contribution, it is an indication that you have got some amount, okay, and you want to reach to your profit, and to reach to your profit you need to subtract something from that contribution, and that something from your contribution, what you'll remove is nothing but your fixed cost. So contribution minus fixed cost will again give you profits or operating profit, whatever you want you can say. Okay. So these are the examples of direct cost, and these are the examples of indirect cost. Okay. So I already told you direct costs are direct material, direct labor, and etc., and those are of variable nature, and indirect costs are like rent and salaries and all, and those are of fixed nature. Fixed nature cost like is a separate thing. Whenever you remove a variable cost from your sales, you get contribution. So we'll discuss something more about contribution, no need to worry about. So let's see some different slides what they are saying about contribution. So let's come to this slide. Components of CVP analysis, already we have seen sales, price, volume sold, variable cost, fixed cost, operating income. Okay. So we have already seen this. We have already seen this kind of assumptions. Yeah. And what is this saying? See, sales price minus variable cost. So variable costs are your direct costs. Those are of variable nature. Direct cost is always of variable nature, and when you remove that from selling price, you get contribution. That contribution, what you got, if you get contribution in dollars, okay, so you can convert that into you can convert that into per unit contribution also. How? Suppose my contribution is $10,000 and number of units what we are manufacturing and we are seeing here for activities 1,000 units. So we get $10 as contribution. Okay. Now contribution margin ratio. Okay. I'll come back to that. Don't worry. Don't worry. Just leave it. Leave it like that. We'll say something else about contribution now. So CVP analysis is a powerful tool for planning and decision making. It can be used to calculate the number of units that must be sold to break even. Okay. Why are we studying this CVP analysis? Why as a cost accountant it is so important for you? Because like it is a very important planning and decision making tool for you when you become a CMA, and it will help you to calculate the number of units that must be sold to break even, like how many units you should sell to break even or get your break even. That means suppose 1 lakh rupees you have spent to start a business and the business is Xerox center. Why? Because it's a simple and easy business. So now you have to see how many papers you need to Xerox in a given year of time to get this 1 lakh rupees what you have spent. Okay, so now we will see that, don't worry. So you are charging 5 rupees for one Xerox. 5 rupees for one Xerox. Okay. So how many papers you need to Xerox to get your like $1 lakh or 1 lakh rupees? 20,000, can I say? Yes, please tell me.
Sir. Yes, sir.
2,000 or 20,000?
20,000, sir.
20,000. So this is the number of units you need to sell to get your break even point, and that you will be getting from the break even analysis. So we are seeing what new points we can learn. The impact of an increase in price on profit. So for example, whatever the break even you got, and suppose in future you have to charge a higher selling price. So that is going to affect your profit in what way? Whether it's going to increase your profit or reduce your sales and reduce your revenue, or decrease your profit amount, etc. Anything. Impact of a given reduction in fixed cost on the break-even point. If the fixed cost reduces, okay, if it is reduced to some level, or for example if it is less, then how it is going to help you to get your break-even point. So break-even point we already have discussed. Total revenue is equal to total cost is the break-even point, or to put it to another way, total revenue minus total cost is zero profit. I already explained to this all things practically. And now we are discussing regarding the contribution margin. Sales minus variable expenses contribution margin. Did I say the same thing to you? Yes. So I'll write it here again, put it here. So I'll put everything. Sales minus variable cost. Variable cost is of direct nature, direct expense. Okay. Gives you contribution. And when you get the contribution, suppose sales minus variable cost is 0. So then definitely you will be at losses. Contribution, when you get a positive figure for contribution, that's an indication that your business will definitely make a profit. Why? Because when you get a positive figure of contribution, that is suppose 30,000, and when your fixed cost is 10,000, that is just rent for example, then 20,000 is what you're getting profit. So from this contribution, when you remove the fixed cost, you get profit. Okay. And this is a new world. This is your learning under costing. Don't ask me a question, sir. Like accounting में income statement हम पढ़े ना, तो वहां भी yes, आप इसको ऑपरेटिंग प्रॉफिट बोल लो अगर आपको कंफ्यूजन, ठीक है, ऐसे भी फाइंड कर सकते. So contribution margin is then used to cover fixed cost and operating income. That means अगर आपको contribution आ गया ना, अगर आपको contribution positive figure आ गया तो आप fixed cost को cover कर सकते हो. That means you get a confidence. When you get a contribution of 30,000, you get a confidence. Now I can really cover up my fixed cost, that is of 10,000, and when I cover my fixed cost, I ultimately get a profit of 20,000. That is what. Okay. So contribution margin income statement divides cost based on behavior. So this contribution is dividing your cost or not? Yes. This is the point. See, this is the point. See, sales minus variable cost minus fixed cost is profit. But this contribution thing is dividing here. It is keeping variable cost separate and it is keeping your fixed cost separate. And between these two, you have this particular thing called contribution. Okay. So you are directly not subtracting variable and fixed cost from sales revenue and seeing the profit. You are first seeing, if I subtract sales minus variable cost, I get contribution. And when I subtract this, this fixed cost from contribution, I get the profit. Okay. So this is what costs are divided into variable and fixed components, and important subtotal is contribution margin. Sales revenue expenses, okay, is contribution margin. And from that, when you remove your fixed cost, you get the operating income. So break-even point is when operating income is 0. So when you get this as 0, it is break-even point. That means no profit, no loss. So units to be sold to achieve a target income. That will go afterwards. Don't worry. Today we are only into the introduction topic. We're going to do some problems even. So here there is a example given, racing bicycle company contribution income statement for month. Sales they are doing of 500 bicycles, that is 2,50,000. From that variable expenses gone, they get the contribution margin. So contribution margin is the amount remaining from sales revenue after variable expenses have been deducted. So after deducting the variable expenses from sales, the leftover amount is the contribution, and it is higher than fixed cost, then it is an indication that you'll get profits. So contribution margin is used first to cover fixed expenses. Any remaining contribution margin contributes to operating income. So now leftover 20,000 is your net income. So this you can find per unit even. Okay. So like $500 is like what is like sales expense, sales what you have made of $500 if you see per unit. Okay. And variable expenses per unit is this, and your contribution margin per unit is $200. And here again what we are seeing, each month racing must generate at least 80,000 in total contribution margin to break even. Okay, so if you want the contribution to break even, at least 80,000 is what you're going to spend, that is the fixed expense. So you'll get the net income from that. So if you are not spending, suppose if 80,000 is what is your fixed expenses, okay, and contribution is also 80,000, then what you're going to get, break even point. Just a second, we'll come back to that. See, we'll come to the example. So what we have got here, this is like 500 bicycles. Okay, the cost is like 2,50,000. So definitely 2,50,000 divided by 500 will give me $500 per unit. You please agree with this or not? Please tell me. Yes, 2,50,000 is the total amount. From that I am dividing 500. Why? Because the total number of bicycles is 500. Will I get $500 per unit? Yes. 1,50,000 divided by 500, I'll get $300 per unit. Yes. And contribution again, 1 lakh divided by 500, I'll get $200. Yes. Now each month racing must generate at least this much. At least this much they should generate to break even. Why? See, my contribution, my if my contribution is 1 lakh, I'm getting profit. But what if my contribution is 80,000? So I'll get break even point as 0. See. Okay. So if racing sells one more bike, net operating income will increase by 200. That means above the break even point, if you sell even a single bike or single unit of your product, you will be at profits. That is what is the ultimate concept here. तो ब्रेक इवन आने के बाद अगर आप एक एक्स्ट्रा भी यूनिट बेच देते हो ना, आप हमेशा प्रॉफिट्स में होगे. ओके, now we do not need to prepare an income statement to estimate profits at a particular sales volume. Simply multiply the number of units sold above break even by the contribution margin per unit. मतलब वो क्या बोल रहे हैं आपको, आपको पूरा इनकम स्टेटमेंट बनाने की जरूरत नहीं है. अभी आप कितने बाइक्स, यानी आपका ब्रेक इवन कितने पे हो रहा है, ब्रेक इवन कितने पे हो रहा है बॉस, 400 यूनिट्स. सपोज आप 400 बाइक्स बेचे तो आपको ब्रेक इवन हो जाएगा शायद. कैसे हो जाएगा? 400 into 500 is 2 lakhs. Your variable expense is 1 lakh 20. So you'll get 80,000, and 80,000 is your fixed expense. Okay. So 80 minus 80 is what? 0. That is your break even. But if I am increasing the number of units of the bikes to 401, that means even a single bike extra I'm selling right now above the break even point, I'll be getting net income. So so what they are saying is, now if you want to find out the profits, no need to go for all the income statement. You can directly multiply that with the contribution margin per unit. So what is the contribution per unit? $200. So let's see. Suppose if the racing sells 430 bikes, its net income will be 6,000. How?
30 bags, 30 into
30 into
200.
200,
200.
6,000. That's yes. Very good. ये मतलब कौन, गणपति उमर सर?
उमर सर, उमर.
ओके। अब ये देखिए आपके सामने वन ग्राफ, वी हैव वन मोर ग्राफ हियर. The relationship among revenue, cost and profit and volume can be expressed graphically by preparing a CVP graph. Racing developed contribution margin income statements at these three number of units. Okay. And we will use the information to prepare CVP graph. So when you are increasing number of units, your sales is increasing. Your variable expenses are increasing. Your contribution margin definitely is the difference of sales and variable cost, but your fixed cost is always fixed. So you can see your net operating income here. Okay. So they have made a graph for that. See, fixed expense is fixed, total expense is increasing, and total sales is also increasing. Already we have seen this kind of graph. This particular point is your break-even point. So what we have discussed regarding the break-even point, when your total cost is equal to total revenue. Okay. Just a second. See, this is your total sales. This is your total expense. And when your sales is equal to, when you are selling, when your sales revenue is equal to total cost, that is called, this is the point now, this is the break even point. Am I right? Zero. So रेवेन्यू भी आपका 1 लाख है और कॉस्ट भी आपका 1 लाख है, दोनों का डिफरेंस करेंगे तो एक्स्ट्रा कुछ भी 1 रुपए भी नहीं आ रहा आपको, तो ब्रेक इवन पॉइंट है. तो मैं क्या बोल सकता हूं, द मीटिंग पॉइंट ऑफ दिस टू इज नथिंग बट द ब्रेक इवन पॉइंट. यस. तो अभी एक बात याद रखना, ब्रेक इवन पॉइंट के ऊपर का जो एरिया है प्रॉफिट एरिया, यानी आप इसके ऊपर जो भी यूनिट्स बेचोगे, जितने भी यूनिट्स बेचोगे, एवरी एडिशनल यूनिट के साथ आपको जो आएगा प्रॉफिट आएगा, और इसके नीचे लॉस रहेगा आपको. ठीक है, चलिए यहां तक छोड़ दीजिए. अभी नहीं, हम लोग इसी को थोड़ा बेसिक्स को करते हैं, फिर कल हम लोग पूरा फुल फ्लेड्ज उतर के चैप्टर को ही मैक्सिमम पॉइंट्स में खत्म कर देंगे. आज हम लोग सिर्फ ये बेसिक्स में ही हैं, ज्यादातर नहीं करेंगे कुछ. ओके, दिस वी हैव गॉट. या दिस वी हैव गॉट. ओके फाइन. आज आप लोग यहां तक करिए और कल हम क्या करेंगे, चैप्टर को फिनिश कर देंगे. पूरा चैप्टर फिनिश हो ही जाएगा नेक्स्ट क्लास में, because I'm taking 4 days, just 4 days to finish this off. Okay, just 4 days. 4 क्लासेस से ज्यादा लगेगा भी नहीं, क्योंकि आज हम लोगों ने क्या क्या कवर किया आप टेक्स्ट बुक में अपना फिनिश कर सकते हो. हम लोग कंट्रीब्यूशन तक खत्म कर चुके हैं. यू कैन फिनिश दिस. कल हम लोग क्या करेंगे, कंट्रीब्यूशन मार्जिन रेशियो से लेके जितने भी फॉर्मूलेस है पूरे फिनिश कर देंगे. ये टुडे वी हैव डिस्कस दिस स्टेटमेंट आल्सो. ओके, सो यू कैन प्रिपेयर एट होम दिस वन. ये खत्म कर सकते हैं आप, ये भी कर सकते हैं. कल हम लोग क्या करेंगे, ब्रेक इवन पॉइंट इन यूनिट्स, ब्रेक इवन पॉइंट इन सेल्स, ये पूरा फाइंड कर लेंगे, पूरा फिनिश कर लेंगे कल, जहाँ नीचे तक पूरा. आई विल टेल यू टिल वेयर. कुछ नहीं है, फॉर्मूले से सिर्फ छोटे छोटे. हम लोग यहां तक, मतलब नेक्स्ट टॉपिक जो भी होगा, कितने चैप्टर, कितना यूनिट्स है इसका, CVP है ना. That means it will take 2 days for us to finish CVP. Okay. There are 33 pages. Okay, कल क्या करेंगे हम लोग, CVP का जितना भी हो सकता है, more 2 classes में CVP खत्म हो जाएगा. Then we can start with other decisions. Okay. So we'll come to the content page. Okay. So ये हमारा पहला टारगेट है, इसको खत्म करना. ओके. अदर डिसीजंस कुछ भी नहीं है, आपको सिर्फ 7-8 पेजेस ही है. तो लाइक 33 से 7-9 पेजेस है, तो वो उसमें कुछ है नहीं. और मार्जिनल एनालिसिस भी आपका थोड़ा ज़्यादा ही रहेगा. तो ये मतलब 3 टॉपिक ही है. बाकी इसके बाद एक बाद के टॉपिक्स तो हम कर चुके हैं पहले. रिस्क मैनेजमेंट, आपको मैं वीडियोस भेज दूंगा मेल पे, ठीक है, चेक करके आज। सो आई नीड जस्ट, मेरे ख्याल से नेक्स्ट वीक में 4-5 क्लासेस में मैं पूरा चैप्टर को वाइंड अप कर दूंगा, ओके। अगर इफ आई एम रेडी टू टेक द क्लास टुमारो, इफ आई हैव सम टाइम, आई विल इन्फॉर्म यू एंड ट्राई टू टेक अ सेशन टुमारो आल्सो, इफ आई एम फ्री, ओके। चलो, हैव अ नाइस डे।